Hey there, YouTube. So this is going to be a pretty quick video. Stay tuned. I'm going to give you guys a read on the market and why I think we're due for a pretty strong sell-off very soon, maybe as early as next week or the following week, I think is when we're going to get it. And here's what I'm seeing. We're at a level right now where we should run smack dab into resistance. And the line you need, the trend line you need to pay attention to is this red line right here. I have this drawn out. This is a weekly chart, so every single candlestick represents 1 week. And if I roll it back all the way to the entire low of the 2009 recession, that's where my trend line starts from. And as we roll it up, you can see on the weekly chart, we've held this trend line, and this trend line has been established as the bull market trend line. And you can see we have several data points where we've really tagged that and held the support. Even in here, we held it all through here, and then we broke it back in December of 2019, October of 2019, or 2018 is when we broke that, and we had some back tests, and that's what we've been doing all of 2019. Here's your big sell-off, your big plunge that the Fed came out and saved the market. That's ultimately what happened. I mean, earnings didn't get any better. It was the Fed, and the Fed came out and basically gave away some of their bullets, some of their ammo, and so and we corrected and came back up, and we've been back testing, and we've just ran right up to the trend line right now, just about there. We're not quite there, but we're just about there. So next week you're going to have 333.50 will be, 333.50 is really right at that resistance. And like I say often, you're going to do one or two things. You're either going to, when everybody sees a major trend line, you're either going to fall short, or you're going to punch through it a little bit before you actually turn around and reverse. So we could easily punch through this and then turn around and reverse, or we could just stop right here and gap down on Monday and sell off in a major way. So the point that I want to make is we're at that level where it makes no sense to take any longs, and in fact it makes a lot more sense if you are long to take profit, or if you want to potentially make money on a sell-off to get short. And that's what I did today. I reestablished my triple Q short, and that's because the SPY is basically right up into resistance. And another thing that gives us just such a high probability that we're going to have a big sell-off is we're extremely overbought on the RSI. So we've got more than one indicators. We've got trendline resistance. We're coming into trendline resistance with all of our energy spent, basically. All the euphoric buying energy has been spent, and everybody's bought already. That's why we're way overbought, because in the short term, everybody's just flooded into the market and bought. And we're now sitting up around the 78 level. If you roll back historically, you can see that basically this 78, if I can move it over here, I mean, this is going back all the way back to 1994 on the SPY. And you can see that, you don't get up to these levels very often. We hit it here. We got up to 78. And that was right before this sell-off right here. And if I measure that sell-off off, I know it doesn't look like much, but if you measure it off, right here, that was a 8% sell-off right there, and that's when we got extremely overbought. If we roll on and look for more periods of time where we're as overbought as we are now, you can see, we were still at 75 there. Here's the last time, besides maybe right here, we were pretty overbought right there. And if I measure that out, this is it's hard to do because, we're going back in time so much, but that was a 3.5% sell-off. Nothing major on those, but the point is that sell-offs come when you get this overbought. And the sell-off doesn't have to be 3%, doesn't have to be 8%, could be 20, could be 40, could be 100. We don't know. This could be the top, we don't know. And this time right here, we got extremely overbought, sitting at 90. And of course that could happen. We could get there again. But the reason why I put this as a very low probability that we get that overbought is because back here we were within trend. We were within the uptrend. This time around, we are running smack dab into major resistance. So before, there was no resistance up here. This was all-time highs. We were above support. It was sky's the limit. Here, yes, we're at all-time highs. Seems like sky's the limit, except we're running into major resistance. This trend line that is sitting right up here, right where we're at. So it's different this time than what we saw before. But even if you look, the last time this was like a blow off top basically, and that was followed by a 12% correction to the downside. So I would say that I would give it a pretty high probability that we're going to get a correction. I don't know how large that correction could be. We can continue to backtest. I mean, you can pull back and then run up and backtest again and pull back and backtest again and ultimately just continue to make new highs while backtesting. But objectively, each time you hit trendline resistance, that's an area to add to a short position. And so if we pull back, you could maybe look at taking some profit. Or we'll have to read it how it comes. But I've been saying in videos for a while, if I zoom in, that we were chopping around here and we were looking for short opportunities against the trend line that we had here. But once we started to break out, I've been saying in videos, it looks like the SPY wants to run up and do a full-on back test of the major trend line, and that's what it looks like we're doing. So looks like we're pretty much right there. I jumped in a little bit early on the short side because I don't want to miss my fill, but that's it. So what do we look? So the other thing to realize is, when do we know we're wrong? All right, where do we put a stop? Well, you could easily see a lot of shorts getting in here. We might grind around a little bit, and the market doesn't quite believe it. We might chop around, and then they could easily do kind of a stop raid where they pop it up above this trend line. And then that would maybe be followed by a big sell-off. So watch for that. I would give it a little bit of room up above here. Just watch for stop raids. If we pop up above here, above that trend line and close above it on the daily chart, I'd give it a couple days up there and see if it can actually hold, or if it just pops it for maybe a day or two and then sells off. I wouldn't be too concerned about it getting up above the major trend line for a day or two, a couple days, and then if it can continue to hold and maybe get a weekly close above it, or a 2 weeks close above it, then you could say that you're probably wrong, and maybe we'll recover the trend line. It's completely possible that we will recover this trend line and it will be a recapture, and then we'll recover it and then continue the trend up. That's completely possible. And so let's keep an eye on that. If that happens, then we'll want to go ahead and stop out. And then, at that point, we'll have to start looking at the bullish case, because we've recovered the major trend line. This thesis here, or this chart setup in the SPY, is one of the major reasons why I've been bearish ever since we broke that trend line. Once we broke that decade-long bull market trend line, I flipped bearish, and that's why I've been looking for opportunities to short. If that changes, then I'll have to change my bias, or change my outlook and flip bullish, and then we'll look for long opportunities and continue to buy, and let the market just continue to go up. It can go up as long as it can go up forever. So I mean, if the Fed is pumping in money and all the other fundamentals are out there, then it can continue to go up. Although I heard a Fed article, or I was watching a Robert Kaplan video, and a lot of the times what you'll see is the lieutenants and the kind of the lieutenants of the Fed, the governors, will come out and start to set the messaging for the major, for Jerome Powell. They'll come out and say, "Oh, we're going to start pulling off." And Robert Kaplan sounded pretty bearish. He sounded like he didn't want to do any more rate cuts, didn't want to do any more balance sheet expansion, and he kept saying that. So a lot of the times, those guys will come out and try to set the tone first before Jerome Powell comes out in a Fed meeting and really sinks the, cements that tone into the market. So that might be the case. I don't know, but the charts tell me this is a great objective area to get short because we're right up here. I haven't been short the Qs for a while. I've let this thing kind of run. We took a stab at it briefly right in here, but took a very small loss. It was a 1.5%, 1% loss basically. And now we're back at an area where it makes a lot of sense to look at shorting. So the trade here, I think, would be, the first profit target would be probably down here at this trend line right here, 308 or so, 310, whenever it actually gets there. You can see that goes back all the way. We've got several tags of that, so we could easily pull back down to there, and that would be a pretty good drop. That would be from where we're at, that would be a 7% drop. So that would get us in correction territory, and that would be what I'd be looking for, at least at first. And we'll have to evaluate. Maybe there's more. Maybe this is the bull market top and everybody's euphoric and it's over, and now we're going to go into a bear market. And if that's the case, we got to look down all the way down here at this funnel, these lower trend lines that we have marked out, and those actually line up perfect with possibly this range here, or the top of that range. So those would maybe be your bear market targets where we get to ultimately. However, it could be a lot worse than this. The Fed doesn't have, what's happened in the past is every time we've had a sell-off, the Fed stepped in. Here's the 2000.com crash. The Fed stepped in and cut rates and did, here they just cut rates. Here, Great Recession, they cut rates and did a ton of QE. This time, if we come down, they don't have the rates, and they've already done quite a bit of QE, so they don't have nearly the same tools that they had before. So if they decide to save this, they're going to have to do it through a lot of QE, and that will be a pretty obvious trade. That would be just long gold miners and long gold, long commodities, and watch the dollar pretty much tumble. So that might be what happens. We'll have to evaluate, what the Fed's reaction is if we get down here in the market. There most likely will be a reaction, but we don't know what it's going to be. So the Fed may just decide to let the market fall. And if it does and they're not there to save it, then I can easily see us undercutting the Great Recession lows and somewhere down here. And then this would be an area you'd probably want to be buying. You'd want to be buying close to the lows here, and anything underneath would probably be a great opportunity to load up long for a longer term bull market. But we'd be in probably a depression at this point if the market was down here. So things aren't going to be all lollipops and rainbows. Anyways, that's it for the video. Just wanted to let you guys know there's the technicals, a little bit of fundamentals, and you guys can do with it what you want. Give me a thumbs up. Appreciate it. Leave a comment. What do you guys think? Are we at the top? Is this, are we not at the top? If we're not at the top, what's going to stop this from moving higher? We do have this trend line. Is this trend line just a fake trend line? Does this not matter? It's had several reactions along this trend line. You can see them. Draw the trend line out for yourself and then try to evaluate what you guys think. Do we recover the trend and continue going higher, or do we fail right here? Let me know, and I'll catch you guys on the next video. Bye.